Let's get to the latest reading on pricing. PCE, that is the Fed's preferred inflation gauge, showing that pricing pressures continue to cool during the month of August, largely coming in line with economist expectations. Here to break it down, we want to bring in Yahoo Finance's Fed correspondent, Jennifer Schonberger. Hey, Jen.
Good morning, Jana. That's right. Inflation continued to drop in the month of August, actually clocking in cooler than expectations on certain fronts. On a headline basis, the Personal Consumption Expenditures Index rose 2.2% in August, compared with estimates for 2.3%. That's down from 2.5% in July. Month over month, in line with expectations, up 0.1%, which is also 0.1% lower from the previous month. On a core basis, which excludes those volatile food and energy prices, a basis on which the Fed prefers to examine inflation, PCE rose 2.7% for the month of August, in line with expectations and up 0.1% from 2.6% in July. Month over month, things looked better. Core PCE up just 0.1% versus expectations of 0.2%. Today's reading likely to keep the Federal Reserve on track for two more 25 basis point rate cuts. Though you look at those Fed funds futures this morning and investors pricing in now a better than 50% chance of a 50 basis point rate cut. So the market hopeful there. However, the fact that core inflation is holding the level of the past couple of months year over year and not dropping lines up more with a scenario for a 25 basis point rate cut. If a 50 basis point rate cut were to be considered, we would need to see substantial weakening in the job market between now and the November policy meeting. We learned from Adriana Kugler, Fed governor, that if core PCE inflation were to clock in at 2.7, that would be in line with her expectations for the current path of rate cuts. We also know that Fed Governor Michelle Bowman is particularly concerned about high core inflation, and Atlanta Fed President Raphael Bostic has also lingering concerns about inflation, which has caused him to look at a slower rate cut path. The next big test for the Fed will be next Friday with the jobs report. Back to you.